Hi all, Mike from MCG here, and today I wanted to cast the spotlight onto commercial property. Now if you're across your tax depreciation legislation, firstly my condolences, and hopefully someone will invite you to a barbecue in the future, but you will know that in May 2017 there were changes to plant and equipment depreciation items. So essentially that meant that if you wanted to claim plant and equipment, you needed to buy a brand new property or put those assets in yourself. Now one of the main advantages with commercial property is that those rules don't apply. So you can still claim depreciation deductions on second-hand plant and equipment items. On another note, we've recently had some new effective life legislation. Normally comes out around 1 July every year. This year it's 2019/5 is the tax ruling. And there's about 281 pages of effective lives, and really only 5.5 of them are residential plant and equipment items. So for commercial property, depending on the industry, there's lots and lots of plant and equipment items that are specified. Now, why is it important to have a property with a greater percentage of plant and equipment items? Well, as an investment, there are way more important fundamentals to whether you should buy that particular property. But the positive of buying a commercial property with lots of plant and equipment items is that you have higher depreciation rates for those plant and equipment items. So if you're thinking about a warehouse, then that's going to have your automatic garage door motors, it's going to have fire services. If there's a little office, there'll be carpet and air conditioning systems and lighting and hot water systems and that sort of thing. So commercial properties can be great for depreciation because of those plant and equipment items you can claim on second-hand properties, and because of the vast list of plant and equipment items. Commercial property we're seeing a lot of investors jump into at the moment. One particular reason is getting the finance for an investment property. Definitely it's hard at the moment, and there are certain hurdles with LVRs and that sort of thing if you're going to your broker. But anecdotally, I've heard some brokers saying that it's easier to get commercial property deals across the line. Now that might be because of the structure, such as a super fund or a family trust, but that's something to take note of. Probably the biggest reason that people are chasing commercial properties at the moment is that yield. It's obviously very, very attractive, and we're talking a net yield rather than a gross yield, which we normally refer to with residential property. Something to keep in mind though, with residential property, there's less of a threat, I would say, for extended vacancy periods. So if you are looking for a commercial property, you need to understand what are the demands for that type of space. Are you investing in an area where there is an oversupply of strata titled commercial warehouses or office areas and that sort of thing? You need to, I guess, forecast what's happening in that particular area and what the demands are. So a good buyer's agent or commercial property expert will be someone that you'll need to consult with. But from a tax point of view, there's some really big advantages in investing in commercial at the moment.